Tuesday, January 20th. And the very first thing I would like to do is ask us if there are any bill introductions. Does anybody on the committee have a bill to introduce? What about in our audience? Does anybody have any bill introductions today? I would like to think that this means we'll have fewer bills, but I think not. I just think people haven't got themselves ready to introduce yet. So committee, today we are going to have an overview and an update on the Kansas Banking Association. We've got the community bankers here and our Kansas Bankers Association folks. So we will, if it's all right with you all, we'll begin with Sean Mitchell. You're first on my agenda, Sean. Are you prepared to be first? Welcome. Such an honor. Thank you.
Well, thank you. There we go. That'll help. So this is my 18th session. Again, I walk like a banker, I talk like a banker. So I appreciate the opportunity to be here. A little bit about the CBA, the Community Bankers Association. We were formed in 1978. We are the smaller. There are two associations. You've got us, obviously, and then the Kansas Bankers Association. We represent, the main differences are our national affiliation. We're affiliated with the Independent Community Bankers of America versus the ABA. We have only Kansas community banks as members, none of big regional and big national banks, U.S. Bank and all that. That's the primary difference. You won't see me up here a whole lot. We are a very small staff. I use the services of Little Government Relations. Stuart and Mallory is with me back here. They make sure that I'm informed because I do all the federal lobbying as well as the state lobbying and education, so I'm kind of all over the place. And I always get the question, so I put it right out there. You will very, very seldom see us differentiate from the KBA's positions. Typically, we're always together. How I describe it is we're kind of the watchdog. I'm here just in case our locally owned banks think bigger banks are having too much of an influence. That's the primary reason we're around on the state side of advocacy. So normally we're side by side. Doug and I, we do stuff jointly all the time, very common. So I will not take a lot of time, but we do focus on advocacy, education, networking. One of the biggest things we do is just get bankers together so that they can share stories, ideas, what to do. Staffing is huge issues, especially when we get to our western communities. Succession for bank CEOs, because they're obviously getting grayer, those sort of things. So we're putting together people to make those things happen. I am obviously a banker by background, so I'm an analytical nerd. Anyone who's been around this committee for a while knows this. In your packet is a 30-page analysis of community banks. Don't worry, I will not go through this. You have it for your information. I give this every year. This is third quarter 2025 information that banks report. The fourth quarter will not be prepared until the end of February. Right around turn time is when I expect to see it, because banks, the data is due to the federal government January 31, then it takes time, obviously, to synthesize it. But in that, it tells you there's roughly 188 Kansas banks. When I started my career in '95, there were 455 banks. We've lost 267 due to mergers, acquisition, a couple of closures, not many, but most all to that. So the landscape has changed radically through this time period. But in this report, you'll see what the stats are, what the health is of our Kansas community banks and versus their national competitors. So it's a real good thing to go, are Kansas banks healthy? The answer, I'll give the short cliff note, yeah, they're in really good shape. And I know the bank commissioner was here last week and talked, so he's obviously the wealth of knowledge on all of this information. If you have questions, I suggest you can always call me or KBA, or go directly to the OSBC, and they can explain all of this to you. But it's just a wealth of information. Take your time when you want to go through it. When we have the fourth quarter numbers ready, I'll probably just prepare another one and send it to the committee so you have the most current information out there. So with that, Madam Chair, I appreciate the opportunity to present. I'm happy to stand for questions at the appropriate time.
Thank you, Sean. Questions, committee? I've got one on your very first page of your handout. The very first sentence, it says, these are key performance trends for true community banks. Many of the banks FDIC tracks are not true community banks. What's the difference? The
difference, especially in this report, I think it's the last page, second to last page. There are 4 community banks that are Kansas charters that are excluded. It's hard. We don't tell who's who on here. One is a banker's bank. They only work with other banks, so they're not a community bank by any means. Another is a specialty bank. They do 0 real estate lending. So you can't compare those sort of things. And then there was another one.
Sean, could you repeat what you said if I could just go back? A banker's bank, could you just define that for me?
What a banker's bank is, it is a special charter. They are state chartered, they're regulated by the OSBC, and they're either a Fed member or with the FDIC. Their sole purpose is to only work with other banks. No consumer transactions. You cannot walk in and get a car loan or house loan. They're moving money between banks, Fed funds, overnight funds. When a bank, say they have a loan that is too big for them, they can participate it with a banker's bank. Banker's bank can then send it out to other banks around the state. It's how we can all work together, but you cannot walk in and do consumer transactions with them.
Thank you.
I actually worked for them early in my career.
Thank you for clarifying that.
Absolutely.
Appreciate it.
It's a unique situation.
Okay, question, Senator Gossage.
Thank you, Madam Chair. How many bankers' banks do we have in Kansas? 1. That makes sense.
There's 1 chartered here. There are actually 4 that are actively working in the state right now. The Bankers Bank out of Oklahoma has come up and started to compete. There's a Bankers Bank in Missouri doing the same, and Bank of the West in Colorado, but only 1 chartered in the state, which is pretty common.
Thank you. Thank you, Madam Chair.
You're welcome. Committee, other questions? Senator Rose?
Thank you, Madam Chair. I also serve on the Education Committee, and I was just thinking, what can our K through 12 schools do, or our junior colleges in the state, or our region universities, to increase the interest level and the ability of Kansas students to become bankers?
That's an excellent question. And you're going to hear something from the KBA. Spoiler, I've already heard Kelly's presentation. So I won't go into what they're doing, but they've partnered with Fort Hays to do something just like this, as well as a lot of our banks all over the state do education in primary, elementary, secondary, on financial literacy. You'll see a lot of communities that actually are schools that have community banks inside of them. That's becoming a very common thing where students are learning how to work in a bank, what it means to be a banker, those sort of things. Those are popping up more and more, and not just urban, but in our rural communities. So that's more and more getting on that education side. Financial literacy is huge, and I know the OSBC has fantastic programs that are supported and educate. But I'll let Kelly talk about the KBA and what they've been doing with that. But it is growing. It used to be non-existent.
Thank you. Any other questions, committee? Senator Hill?
Thank you, Madam Chair. Thank you for the presentation. As someone who really prefers to bank where I know the entire ownership, staff, et cetera, I have concerns about the consolidation of banking. Is that just economies of scale? Is it regulation compliance? What are the things that are driving that in our state?
Thank you for the question, and it's an excellent question. What you hear when you talk to bankers is the regulatory burden. Now that we've had Dodd-Frank, the sheer magnitude of the regulatory changes When you're a smaller bank, you have a limited staff. It's very, very difficult to comply with all of that. So that is driving a lot of it. You get the economy of scale when you've got two banks, say they're both 150 million. When they merge together, all of a sudden they've got almost double the staff. They can handle the compliance issues. So that is the number one driver. Another one is succession planning. Because of the aging executive suite, trying to get people who are willing to learn and to move up into that big chair, that's a tall ask. That is a lot of stress, a lot of pressure. And that's driving some of this too. Again, then how do you get someone, especially in our rural areas, who's qualified, who wants to go do that, can understand the compliance issues? It just kind of multiplies. That is the number one issue.
It'd be a conversation I'd like to have more in depth at some point in time. So thank you very much for that.
All right.
Senator.
Thank you. Committee, any other questions? If not, Sean, thank you so much. Always a pleasure having you here visiting with us, even though we don't see you that much. We have Stuart and Mallory. Yes, you're welcome. So our next presentation is Kelly Van Zwal, Senior Vice President of Government Relations, Kansas Bankers Association. Welcome, Kelly.
Hi, good morning. Thank you, Madam Chair, members of the committee. I have a PowerPoint as well, so let me get that.
Okay.
Okay, you never know if that's going to work, so we're off to a good start. Thank you, members of the committee, for the opportunity today to give you an update on the Kansas banking industry. My name is Kelly Van Zwal. I am Senior Vice President of Government Relations for the KBA. I also have with me Doug Wareham. He is our President and CEO. And I have J.W. Wells, who oversees our Ag Bankers Division and is our Government Relations Assistant. Doug is really our point person on the federal advocacy level, and then I am at the state, but we work as a team, and we'd be happy to help you guys with any questions you have at either level. We have a couple new members on our committee this year, so I'm going to do a little bit of a KBA 101. So the KBA was founded in 1887. We really have been banker-driven for 139 years. Our current membership includes 186 of the 188 banks that are headquartered in Kansas. We also have 24 of the regional or national banks who have a presence in Kansas, 13 trust companies, and 138 associate members. Though we have all banks from the biggest to the smallest, we're truly banker-driven in that our policy process is one bank, one vote. So all banks have the same power when voting on issues at the KBA. We have a 40-member staff team that is headquartered here in Topeka. We have our government relations and advocacy team, who you see the most often. We also have an education and training department where we put on training from the CEO to the teller. We're doing trainings about 300 days out of the year, whether in person or online. We have an insurance and employee benefits team, so sometimes you'll see us on insurance issues. We have a employer self-funded plan. We are the second largest plan with Blue Cross Blue Shield behind the state itself. We have about 9,600 lives on that plan, and so we're really proud to have that with us. And then our largest part of our staff team is our legal department. So that is our legal and compliance team. We have 14 attorneys. And the reason it's grown is because of the regulatory burden that Sean was just speaking of. We had our banks come to us and say, we need help keeping up with the compliance. And so we started our legal department and our compliance outsource. The banks can actually enter into a legal relationship with us. We can act as counsel, we can draft documents, we can give them legal advice. We also have outsourced compliance. We can act as their compliance officer and work with their compliance team in their bank. We have audit services, we have HR services. We're really, anything that they could possibly need to keep their bank running, we're trying to offer, because the smaller banks in particular are having a hard time keeping that staff and keeping up to date on all of the changes. Within our team, in our administrative team, we also have our Kansas Bankers Educational Foundation. It's through our foundation where we do scholarship opportunities. It's also where we partner with Fort Hays State University on the Robbins Banking Institute, where we're really trying to grow the next generation of bankers in Kansas. We're really proud of that program, and it's been such a hit that we've actually been able to reach out to Benedictine, KU, and UMKC to work with them on developing banker-specific either degrees or career paths. So again, we're really trying to get the outreach out there on the education level, because the next generation of banking is important to us. This is kind of a big picture screenshot of all the banks that are headquartered in Kansas. Again, this is just headquarters, it's not showing branches, but just kind of wanted you to see the idea. And this map is going to become even more important when I think about consolidation, and we talk about that on our next slide. Consolidation is probably our biggest worry that we're working on right now. So Senator Hill, you had a very timely question for me here. If you look at the chart, from 2024 to 2025, we dropped from 203 bank charters to 188. It's a large drop in 1 year. Mostly it has been Kansas banks buying other Kansas banks, so they're still staying in the state and in the community, but still something for us to keep an eye on, because even when a Kansas bank is buying another Kansas bank, you're still going to lose that leadership in the community. You're going to lose the board of directors. You're going to lose the C-suite, and those are the people who are really involved in the community. They're on the school board. They're on the hospital board, and every time we see that go down, it's just another hit on those towns. There we go. So what is driving this consolidation? As mentioned earlier, it is just the federal regulatory tsunami, which is what we call it. The 2008 financial crisis led to the Dodd-Frank Act, which was 22,000 pages of new rules for our banks, and it was not tailored to bank size. So unfortunately, your smallest community banks are dealing with the same burden as your biggest banks in most cases. Another issue that's driving this is tax inequality. We do have some tax-exempt lenders who are growing their market share, and some are even buying banks. And so that's an issue we're facing. Another is non-bank competitors. I like to say that everyone wants to be a bank. No one actually wants to follow bank regulations. Right now, our biggest concern in that area is cryptocurrency and stablecoin platforms and vendors, which you'll hear about in a little bit. But they're just the latest outcome of this kind of deposit flight we're seeing. When you think of Venmo, PayPal, Apple Pay, these are all vendors that are taking money out of the banking system. And when you put your money in Venmo or PayPal, it's not FDIC protected, and you're not getting interest on it. You know, is Starbucks a bank? No, Starbucks isn't a bank. But last year, through their app, they held over $1.8 billion in customer funds. They floated that money and invested it, and they earned $21 million just off the interest income by investing those funds. So again, they're not a bank, but they're playing with a lot of people's money, and they're kind of playing in that space. Our last thing we're looking on is lack of succession planning, which was mentioned earlier. When you talk to some of our older bankers, they will say that back in the day it was 80% lending, 20% compliance, and now it's 80% compliance, 20% lending. So the next generation looks at that, and maybe they're not as incentivized to continue doing this business. We also haven't had a new bank since 2007. That was the last time we had a startup in Kansas. So how can we continue to grow a market when no one's able to get into the industry? Doug will touch on those points as well in a minute. But again, why does it matter? Because we want local decisions being made at the local level. We want local lending, local investment, and local leadership. And when you lose your community bank, you lose all of those for the entire community here. However, there is some positive news. I don't want it to all be negative here. 2025 was a transformational year for banking at the federal level. The new administration brought in new regulators, and they really have a focus on Main Street banking and regulatory relief. You'll see U.S. Treasury Secretary Scott Bessent's quote here, where he really talks about making sure that banks that serve Main Street have the same chance to succeed as the banks that serve Wall Street, which is what we're all talking about here. This means a lot to us because at the federal level, we have a lot of regulators. We have Treasury, FHFA, the Federal Reserve, the SEC, the FDIC, the OCC, the CFPB. It's an alphabet soup, and we need them focused on keeping our community banks strong. Another appointment I just want to highlight here is our very own Federal Reserve Bank Vice Chair for Supervision, Mickey Bowman, a Kansas banker who's now been elevated to this position. Not to brag, but she's also a former graduate of the Kansas Bank Leaders of Kansas program, so had to get that in there. She is in a great spot for us at the Fed because she's really focusing on over-regulation, and she's going to really work on tailoring these regs to fit the community bank model. And as a community banker, she understands that better than most. Now I'm going to have Doug Wareham come up and talk for a little bit. He's going to kind of touch on some federal points for you, and then I'll come back and close on the state level, if that's all right, Madam Chair.
Welcome, Doug.
Thank you, Madam Chair and members of the committee. I am Doug Wareham, President and CEO of the Kansas Bankers Association. Today, I'm proud to be Kelly's assistant. For those I haven't had the chance to address before, I know we have a new senator on the committee this year. Two new senators on the committee this year. For the record, I'm a farm kid from Northeast Kansas. I'm also an SOB. That it means I'm a son of a banker. So I grew up with a father who was a rancher that was an ag banker for 35 years of his professional career. Now he's just a rancher. I've been with the KBA. I've had the honor of wearing a lobby badge. This is actually, I think, my 30th session, Madam Chair, but the past 21 with the KBA. And I appreciate the questions about how we're fighting to find the next generation of banking industry leaders. We're doing that, Senator. I really appreciate the question about, your concern, Senator, about charter loss. You heard, Mr. Mitchell share how many banks, over 400, when his career started as a banker 34 years ago. Kelly put up the slide. That slide's a slide I've been using for years to show what I have described when I talk to Rotary clubs or groups across the state, civic leaders across the state. I call it boiling the frog. I never did that as a kid, but I was always told, if you put a frog in a pot of warm water and keep turning the heat up, eventually he just dies from the heat and doesn't recognize what's happening. Sometimes I feel like that is what's happening to our industry. We're keenly aware at the KBA, and our leadership of our association is keenly aware of consolidation as what's happening, but I think it's incumbent upon our policymakers in Washington, D.C., in this beautiful state capitol building, but in particularly this committee, to understand what's happening. I think we're getting real close to a point, in fact, I think we're there, where when we lose a bank charter, what we're really losing is the leadership in a community. When you lose a bank charter, and again, we still have roughly, I know the OSBC, the Office of the State Bank Commissioner, presented and probably said, well, we still have roughly the same number of branches across the state. But as that Northeast Kansas rural kid that grew up 3 miles south of Whiting, Kansas, a small community that when it had a charter, it had a 7-day-a-week grocery store. Of course, it had the post office. That is still there. It's about the only thing still there. A couple of machine shops that had an active restaurant and a grocery store. Why? Because it had a community bank. It had a community bank that was backed up by people in the community who were leaders who were invested in that bank. They wanted Whiting, Kansas, back then, population 240, to be a vibrant community. And when that location became a branch because it was acquired by somebody else, they took that, they took that charter, moved it to Kansas City. Then they went to a 3-day branch, and eventually they shut it down. So that is what's happening. But to me, it's the leadership when you lose a charter. You lose a CEO in the community, a CFO, the head of IT. You lose a significant amount of payroll. And all of those leaders, as I know you all are keenly aware, they are the people that serve on the local Chamber of Commerce, the local hospital board, all of the economic development boards. When I lived, I'm now in Topeka, but when I lived in Holton, Kansas, I was on the economic development board for Jackson County, Kansas, just to our north. And every major project we did, it was a wonderful board. I loved it. I think there were 11 of us on it. But every time we got to a major project and said, we're going to redo this city park, or we're going to try to draw this business into town, or we're going to look at infrastructure for housing, when we got push came to shove, everybody on the committee looked at the 3 bankers to see if they were going to get behind the project as the bank financially and help make it happen. And anything we ever did that was meaningful, that is what happened. So I think we have right to be concerned. We've seen this consolidation trend, and as Kelly said, I had the pleasure, I became to KBA in 04 and 07, 06, 07, I cut 3 ribbons. Unfortunately, all 3 of those banks. I think the most recent was actually Freedom Bank in Overland Park. Vision Bank here in Topeka was one of those 3. All of those have been acquired. And banks are businesses too, so I'm not here to say that mergers and acquisitions is a bad thing. But what is a bad thing is when the federal government sets the standards so high that a group of people in a community, local leaders, simply can't come together because the thresholds they've set so high for the initial capital requirement to start a community bank just makes it unattainable. And frankly, what I've heard, because I've had people, young people from the banking industry come in and say, Doug, we're looking at de novo, which is the term for a startup bank. We want to do that. And every time we've talked to them, we've said, we'll do everything we can to help you, support you. We'll connect you with other bankers like Gary Yeager with Vision Bank here in Topeka, who I know the chair knows well. And we'll point them to people who've done that, who've done a startup. But they always come back and say, well, the federal regulators want us to raise $35 million. I think the last startup we did in Kansas was done with 8. Well, the rate of inflation, I know we've had inflation. We've all been impacted by that. But it's not from 8 to 35. The reality is in Kansas, maybe 35 million, if you were starting a new bank in Chicago or Atlanta or somebody else, you could deploy those funds. I'm here to tell you, if this committee joined me and we said we're going to start a new de novo bank in Kansas, and we tried to deploy 35 million in probably all but 3 of our communities, we'd have a tough time doing it. The reality is we'd probably be making some risky loans to get it pushed out there. So it starts with that. We need Congress, we need Washington, we need the FDIC, we need the federal bank regulators, the Office of the Comptroller of the Currency, the Federal Reserve, and the Treasury Department itself to recognize that those threshold requirements for startups are standing in the way. It is my job to stay in touch with what's going on in D.C., and I want you to know that right now there are a couple of different bills that would do just that. Congressman Andy Barr from Kentucky has been spearheading legislation that would require much lower capital requirements that would get stair-stepped in over time. You know, back to, and Kelly mentioned it well, why consolidation, regulations, tax policy, and advantage competitors? It's just simply that. You saw the staff team I'm building. That's probably the #1 thing I would say on the regulations. I mean, we have a tremendous payroll. Now, 14 attorneys. When I came to KBA in 2004, I had a legal department of 5. 2 of them were attorneys. Now we're up to 14. So there's a tremendous amount of cost. Even though we're working hard to help community banks do it, there's still a cost associated with doing that. There are a number of bills currently being considered in Congress to index federal regulatory thresholds and to tailor regulations, which tailoring is a friendly word for what federal regulations simply shouldn't apply to a community bank. And we have to start out with what is the threshold of a community bank. In 2008, when we had the financial crisis that led to the passage of the Dodd-Frank Act, which was, its real name was the Wall Street Reform and Consumer Protection Act, but we commonly know of that as the Dodd-Frank Act. Well, that was the turning point. The Dodd-Frank Act led to 22,000 pages of regulations and all this regulatory requirements. And those requirements impact banks when they hit certain levels. Banks have more auditing and review requirements if they hit 500 million. Right now, our average bank size in Kansas is around 300 million. So we have a lot of banks that when they get to that 500 million, it's going to cost them more simply to be a bank. So whether it's 500 million, the 1 billion mark, or a key one is the $10 billion mark. And I'm going to use CapFed. John Dicus, many of you probably know him, the CEO of CapFed. He is on our board of directors. CapFed, if you look at the report that Mr. Mitchell, those type of reports provide, you can look up banks' call reports. They have been at $9.9 billion for more than a decade. Why is that? Because they have tremendous costs if they go over that $10 billion threshold. Their fee income is capped and cut on debit card and credit cards, so they lose about $6 million the second they go over with that. But more exams, more requirements, more rules, more regulations. And if they had simply indexed those thresholds, including that one, when they were adopted in about 2010, that 10 billion threshold would be up to 15 now. And if it was 15, CapFed would, I have no doubt, be close to that. They would be growing. So we have to get that fixed in Washington. We're working very hard. I want to tell you, and I'm pleased our congressional delegation is working closely with us. And we have a moment in time right here. I try to never be political, but the facts are the facts. The current administration, led by Treasury Secretary Bessent and our very own Mickey Bowman, who's the Vice Chair of Supervision at the Fed, she is essentially the top bank regulator in America. She's in charge of all of the Federal Reserve's regulatory staff in D.C., and that trickles down to every other agency. So we do have this wonderful moment in time where we are working very closely with people like Natalie Haig, the general counsel at CapFed, and representatives from banks across the state, large and small, we represent them all, to get indexing done of those regulatory thresholds to allow banks to grow without being punished for growing, and also to look at regulations that simply shouldn't apply to a community bank. And I would argue if a bank's under 10 billion, it's a community bank. So we don't even have a bank over that. There's a lot of talk in DC that the community bank definition threshold, instead of being 10 for most regs, should be 25 or 30. So we're hopeful that happens. We're hopeful they make it easier for startups. We are also hopeful that FDI deposit insurance is increased. You all can remember just a couple of years ago, we had the failures of SVB Bank and Signature Bank. These were banks well over 100 billion in assets. We don't have any of those here, although we do represent proudly Wells Fargo, Bank of America. They have a presence in Kansas. We want a competitive banking system with, I mean, we have big business in Wichita and Kansas City. We need big banks here. But we also need to make sure that there's a level playing field on deposit insurance. When those large banks failed, the federal government, specifically the Treasury Department, stepped in, and where normally your deposits are protected up to $250,000, they stepped in and said, no, we're going to protect all deposits. What did that do? It caused big business across America to say, whoa, I don't want to be with a community bank. I don't even want to be with a regional bank like our largest institutions, Intrust and Commerce Bank, UMB, which are $30 billion banks. We saw significant deposit runoff to the 6 largest banks in America. Okay, we're working really hard to ensure that we have FDIC deposit reform so that doesn't happen again. And we at the KBA are saying one of two things. Either Congress has to stop bailing out when a large institution gets in trouble. We have to stop bailing them out, or we have to have much higher, if not universal coverage of FDIC deposit insurance so everybody's competing on the same level. That's one of our top priorities. The last thing, Madam Chair, because I know I'm talking too long, just so you're aware, and if anybody wants to grab me at any time, reach out to me. I'm happy to come visit with you. So you're aware at the federal level, there is a big debate going on with stablecoin crypto right now. You've probably read about it. Congress adopted the Genius Act, which was the first step in creating the structure for the crypto, Bitcoin, stablecoin industry. There is now an effort to further define the structure for that I guess, dawning industry. And there's a big battle going on because stablecoin, which is a type of cryptocurrency that is backed by a dollar, and our industry's okay with that. We're not opposed to innovation. But what they are now saying is they want to be able, those providers want to be able to pay interest or rewards on that. Well, that becomes a bank deposit. And those parties, and we already have heard from as close as Nebraska, there is a crypto provider that is saying, as told my counterpart there, they want to start doing crypto loans. Well, I always say, and Kelly says this, I know a lot too, everybody wants to be a bank, but they don't want to be regulated by the layers of federal and state regulation that ensure the safety and soundness of all of our money when we go to the bank and make that deposit. So there's a critical debate going on in Congress right now on that issue. If any of you ever want our insights, let us know. What we've said is there needs to be an ironclad prohibition from stablecoin paying interest or rewards unless they're going to be regulated equally to what banks, how they're regulated for our deposits that are required by state and federal law. The other issues that have recently gotten quite a bit of fanfare there's federal legislation that's been introduced. Number one, a bill to cap credit cards at 10% interest. I just got this morning. As Sean said, we are affiliated with the American Bankers Association. They just released this, and we have a Kansas-specific report here for you to see of what would happen if the federal government imposed a 10% interest rate cap. You can read it there. 73 to 85% of cardholders would simply be pushed out of the market. That's people losing access to credit. A lot of other people are going to see their credit limits go down. We're opposed to price controls, so we're pushing back on that at the federal level. There's another bill that's been introduced that also deals with changing, if I took in my Visa card, and I'm a Marriott guy, so I have my Marriott Visa, I would swipe it. There's a bill that would take away from that being processed by Visa, which is what I want as a consumer because I get those points, and the merchant would have the right to choose another processor, which, needless to say, would be cheaper, maybe less secure, and it's certainly going to not reward me as the cardholder. So we're seeing a push for government interference in the credit card market that I haven't seen as strong. We've been battling the second issue for a few years, but the 10% rate cap actually got a lot of fanfare because President Trump came out and said he was in favor of a one-year interest rate cap. We think that's a dangerous game. You know, beef. We don't want a rate cap on beef. I know my dad doesn't. He's in the cattle business, and there's been a lot of years he hadn't made money. They're doing really well right now, but we want the free market to work. We don't want government interference. I'll pause there and be happy to stand for questions. I know Kelly's going to finish her report first, if that's okay, Madam Chair.
Sure. Go ahead, Kelly.
Okay, let's get back to the State House here for a second. I just want to say, I want to start with a thank you. Last year, you guys voted on and passed House Bill 2152, which was one of our big public funds initiatives. Part of that bill dealt with the Kansas Bank CD program. So the Pooled Money Investment Board is the state's investment arm. They invest all the state's funds. They have a Kansas Bank CD program that allows Kansas banks to pull these deposits down. When we were working on the bill last year, only 0.4% of the pooled funds that you see on that chart were in Kansas Bank CDs. You all passed a bill, it went into effect in July. It's now up to 1.97%. That's 4 times more of your state funds that are being deposited into Kansas banks, which means that's $117 million being lent back into Kansas communities. So thank you, your efforts matter, and we were really proud to see that. At the state level, this year, we're really focusing on financial literacy and fraud prevention. Unfortunately, we are just getting inundated with calls from our banks on fraud. With the increase in technology, it's adding a whole new dimension. It's coming at us on all sides. The FTC says last year that the consumers lost $12 billion in fraud losses. What we're working to protect that is we are working with the OSBC on legislation to protect consumers who are using crypto ATMs. We are working with the credit unions on a voluntary trusted contact kind of reporting mechanism, and you'll hear more from us throughout the year on those pieces of legislation. And then we're also working with the State Treasurer's Office, the OSBC, and the Attorney General to help educate consumers, because what we realize is we can educate our bankers all day long on what fraud looks like, but what we really need to do is get to the consumer before they even fall for that scam. And so we're speaking at Women in Money conferences. We're having public lunch and learns on fraud. We had the AG's office on our podcast on fraud. It was our most listened to podcast. And then we also have done some PSAs, which I would like to share one with the committee real quick.
Hello, this is your bank. If there's a problem with your checking account, I'm going to need your account number and your password to clear that up.
No way. Banks never ask that. Every day, thousands of people fall for calls from scammers pretending to be a bank. If you receive a phone call from someone claiming to be your bank and asking for confidential information, the safest thing you can do is hang up. Remember, banks never ask that.
So that's one we did with the State Treasurer's Office. We have another one. Let's see here. And I don't need to play it for you unless you'd like. We could play the family code word real quick if you have a second. But it's a family code word, so we're encouraging people to set up a code word with their relatives so that when they answer the phone and there's a scam, they ask for the family code word so they don't fall for it. But these have been airing on TV, and we've gotten really good responses on both of them. But the fraud's getting out of hand, and we've got to get creative in how we deal with it as a community. So I just want to close. I want to close my presentation with just saying thank you for your time today, and thank you for all the work you guys do up here in this committee on the legislature. At the KBA, we really believe that banks need communities and communities need banks, and everything we do up here is to serve that goal. So thank you, and we'd be happy to stand for questions.
Thank you very much, Kelly and Doug. Thank you. Love those PSAs. I actually have seen that more than once.
Good.
So they're
good.
running pretty regularly, so thank you for that. And I do appreciate the fact that you're working together with the credit unions, the OSBC, to work on the fraud piece, because we've gotten just a number of complaints over the years, so thank you for that. So committee, questions for our presenters? I feel like I sat through a college class on banking between the two of you, so thank you for that. Yes, Senator Gossage.
Thank you, Madam Chair. Just a curious question. So more funds are now invested, from state funds are now invested in Kansas banks, which is great. I mean, we all like things to be local. But it begs the question, how does the return compare to where these funds were invested before?
And so the bank CD program is for smaller terms. It's like, I think they have 3, 6, and then I want to say another term limit for money. So it's smaller term deposits that are coming down, and they're still getting a competitive return based off the market, but it's not going to be, it's a deposit return. So it's not going to be like an investment like a treasury. But then again, that money's going into your community and then being lent out into the community, and it's doing a lot of good in Kansas versus going to New York.
My last question, if I may, Madam Chair, is I'm thinking one of the 15 banks that was shown as closed last year was the Kaw Valley Bank in Eudora. We moved there in 1974, and Jim Hoover was the president of that bank, and before that was his father, Kelvin Hoover, and then his son, Jason Hoover. It's always kind of been in the family. My kids all got their little dimes that they put in the little books there. But just this, I think it was September of last year, they consolidated with Farmers State Bank. So is that considered one of the 15?
So that would be a merger then instead of a close, because it merged with one of the other Kansas banks, I believe. I think that's right. But it is a loss of a charter. So it still goes to one of the charters we've lost, but it's not like the bank was closed for business purposes.
Okay. And also one of the things, like I live between two little towns of Eudora and DeSoto. There are 2, in some places 3 banks in those little towns. So are we seeing, are what we're saying is there not enough banks, or are we saying, because there are places that you can go and like, wow, Baldwin City, I think, has 4 banks, that you can go and say, there are actually a lot of banks here. Is it just the consolidation to where you see Mid-America Bank here, 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 and here, or UMB branches? Or just explain to me why we're concerned.
Sure. And I think our concern is more on branches are great. You need branch locations to help your customers. But like Doug mentioned earlier, a branch is different than having the headquarters there, and it's different than having the leadership in the community there. So that's how we see that effect. You still have access to financial services, but you're maybe not getting the community leadership that you would typically get. You're right, some areas are going to have healthy banking environments. They're going to have 3 or 4 banks, and that's great. They're competing and they're helping the community, and then some are losing it. So it might be a little more area specific, especially as you move out further west. I don't know if you have anything else on that, Doug?
Yeah, if I could, Madam Chair, my concern is take the trend of the last 20 years and the next 20. If we maintain this pace, I probably won't be here, but somebody's going to be up here testifying and talking about having 15 charters in Kansas. Again, we are heading towards a scenario where we're going to have a lot of communities, and a lot of communities of size. And I say, in this wonderful state, if it's 5,000, it's a city. Because I'm the kid that grew up south of the town of 240 that now is down to about 100. And again, so I want to applaud the Kansas legislature. This body and this building has always responded to try to keep Kansas to be a great environment for banking. Unfortunately, this stuff is coming from D.C., but I would argue any industry that sees this kind of exodus, and it is, it's people, the Hoovers, I know Jason well, and I hate every time I see that. There's another, family-owned business that has done so much in that community, and it's gone. And again, I'm sorry, I have banks that say, Doug, I don't like you saying, my branch network isn't as good as a bank. Well, it's not the same when you take that board of directors leadership out of
And
it.
if I may, when you talk about leadership, of course, his dad was mayor of Eudora for years, and then Jason became mayor of Eudora. And we've seen kind of that community leadership that everybody knows, to get your sucker, and everybody knows everybody that works at the bank, and they have all kinds of community events there. And I don't know if they'll still continue to do that or not. We still have the downtown bank in DeSoto that's been there forever, and they just did some renovations. And so thank you for answering my question, because when you're saying it's just different, what is your answer to stop these mergers or stop these acquisitions, if any?
Well, again, I think it's a combination of things. It's recruiting the next generation. They're there. Banks are a business, and it's a wonderful business. We've got to get back to where the up-and-coming leaders that are a market president can say, hey, I want to get together a group of investors and start again. We have to get entrance back into our industry. That's one of my top
you.
priorities and a top
Thank you,
priority.
Madam Chair.
Thank you. Senator Rose, last question.
Thank you, Madam Chair. I think this is probably going to be for Doug also. Maybe even two questions. Do you anticipate the changes in regulations that the current administration in the White House is working on to move the arrow so that in the state of Kansas we're growing in the number of charters?
I don't think regulation alone gets us there. I truly believe it's a combination of regulatory relief, right-sizing regulation, so community banks aren't doing things that they simply don't need to do because of their risk profile. So regulation is a key piece. The other one is tax policy. And I'll say this, and we're working well with the credit unions, but it's a fact. We've had 77 banks in America bought by credit unions since 2010. Why? Because they don't pay state and federal income tax. We've lost market share, Kansas banks, to the farm credit system. My dad worked there when I was a kid. I loved going to work farm credit. So we need a farm credit system. We need competition is what we want. But farm credit system is exempt from state and federal income tax. I always say, Senator, if you're selling snow cones on one side of the street and I'm on the other, and I'm paying state and federal income tax and you aren't, you're going to be there long term. So we have to focus on these tough tax issues. Senator Moran helped us do that this year. A component of the One Big Beautiful Bill, there was a piece in there that made banking, ag, real estate loans more competitive. So Congress is starting to listen. The second part, so I just think it's a recipe of that, and we're working on the leadership piece, trust me.
Okay. So you've discussed, you're anticipating changes made to Dodd-Frank. And when do you anticipate those changes will be made? And would you like to make the Kansas legislature aware of any impact that would have, any bills that we'll have to consider in response to this new regulation?
Well, again, most of what we're talking about that we want to see Congress move on is regulatory relief. So I don't believe there's really a state role or a piece of state legislation. Certainly, some of what happens at the federal level could trickle down to how the Office of the State Bank Commissioner regulates and examines banks. But we believe it's going to happen in the first 6 months of this year. It is happening right now. The chairman of the U.S. House Financial Services Committee, French Hill, has Make Community Banking Great Again bill. He's actually just changed the title to something else, but it's a package of reg relief. So it is happening under consideration right now in Congress, and we're hopeful 2025, when we look back, we say is one of the most widespread bank relief, regulatory relief reset moments that Congress has ever had. For the last 20 years, or since 2010, it's been nothing but new rule, new reg, new law, new requirement, new cost. This is the first time in my career at the KBA Congress is aggressively trying to go the other direction.
Thank you. Thank you so much. Really appreciate all of our presenters today. You've given us a lot of great information, and of course, we know you're available to help us. Committee, before we leave and I adjourn, I want you to know that you're going to get an email, if you haven't already, from Jackie. We have 5 confirmations coming up that we've never done confirmation hearings in this committee. So there are 4 for the State Banking Commission and 1 for the Kansas Development Finance Authority. So she'll give you the names of the folks who are going to be contacting you, and they'll want to meet with you and tell you a little bit about themselves, because then they'll come to us for a hearing and we'll vote on whether or not to recommend them to the full Senate for their confirmation. So Jackie, have you sent them the email? You've got the email with their names, so when they start contacting your office, you'll know why. Yeah, confirmation packets are not quite available yet. So you will get a packet of information on each individual that are confidential, and they'll come through us during a committee meeting probably. So we are, though, and here's where I'm going with all this information for you, we are going to have to start meeting on Mondays, because we're going to have too many hearings and too many bills that we'll have to have a hearing on and possibly work. So do plan on meeting Monday, January 26th, February 2nd, February 9th, and our last day to meet is February 16th. So we've got a lot of work to get done in the next few weeks, and not all the bills have been read in yet. So I just wanted to have you potentially schedule that. We'll know for sure the closer we get to Monday the 26th, but I do plan on having to work Mondays, so in our committee. So I'm not going to go there. Eileen said a bad word. Okay. I'm joking. All right. So any questions before we adjourn? Thank you all so much. We do meet tomorrow. See you then. Bye-bye.